on. And just to start off, my name is Luke Robinson, and I am a new business advisor here at Collective. And Collective, you can think of us as kind of like an all in one solution for a self employed individual. What we would do is you can kind of think of us as well, more specifically, an all in one solution for someone who needs to be an S Corp or who already is an S Corp. What we do is set up your business. That's the first step. Handle your payroll, bookkeeping, tax advice throughout the year, and tax filings at the end. So think of us as kind of a tax factory to where that'll handle everything for you, and you won't have to have other professionals or other softwares. But today, it's an exciting day because it's Tuesday, best day of the week as far as I'm concerned. And the reason it is because it's a tax Tuesday. And essentially, what we do here is we run an AMA. It's a tax Ask Me Anything. So any sort of questions you have about taxes or bookkeeping or how to set your business up for success, any sort of tips to keep in mind, I will do my best to answer them. And I promise anything that I can't answer, then I will tell you to go to a CPA or a professional that can look more deeply into your situation. And also, real quickly, before I go forward, I just got to get the legal stuff out of the way. Think of this. Do not think think of this as official tax advice or legal advice or anything like that. This is just an informational setting. I don't see your personal situation. So before you act on any of this advice, go to a CPA, go to a tax attorney before you do anything that I say, because it could not apply to you. It could be completely wrong. So please just think of it as informational. But I believe we already have some questions that are coming in. And the first one is, what steps can I take to check who I need to send a 1099 form to? Well, first of all, just a quick word on what a 1099 form is. A 1099 form is essentially a form that records how much you've paid a professional. So let's say that it's a 1099 contractor is who they are. So let's say that you've had someone, work on your website for you. Or if you hire a 1099 contractor, let's say that you're getting some marketing consulting or business consulting. Those are 1099 contractors. And however much you pay them, you have to report that on a 1099 form. And you have to send that to two sort of areas. You've got to send the 1099 to the person that you've paid for services, and you've got to send the 1099 to the IRS. That's also required too. Now it's required. You don't have to send it to everyone, but generally, I believe it's either $400 or $500, or I'm sorry, $400 or $600. Let me check and see what that is. 1099 income. I want to say it's $600. Let me see. I'm sorry. I just don't want to tell you wrong information. It's $600. So anyone that you pay, more than $600, that you're required to send out 1099s, both to them and the IRS. So keep that in mind. I'm sorry. My dog is going crazy right now. Charlie. Shh. Charlie. Shh. Okay. I'm sorry. Please excuse my dog. He's freaking out. Here's another question. Is there anything I can do to get more money in each of my paychecks? Ooh, that's a good one. So it depends on what you mean by paychecks. Like if you mean W-2 paychecks, like you're getting paid by someone else and you're getting a W-2, then what you would do, well, first of all, you can adjust your withholding by turning in it's called a W-4 form to your employer, and you can adjust how much taxes get taken out of your paycheck. So you can do you have exemptions on certain things. So you can turn that in and you can adjust them downward if you want to. But be careful before you do that, because if you do that, then you might not be paying enough tax. And at the end of the year, if you're not paying enough tax, you owe a bunch. And if you can't pay it, then you're penalized. You might have to go on a payment plan, and that's just usually not a fun time. So only adjust your withholdings if you expect to get a big refund. So only do it in that sort of situation. Don't do it just because you want to have more money, because you're going to have to pay it back anyway. All right. Okay, we've got some good questions coming in here. So one, if I work abroad, do I have to pay US taxes? Yes. In a vast majority of the time. There are some situations where you don't have to, but a vast majority of the time, if you're a US citizen, or if you're a US citizen and you work abroad, you still have to pay US taxes. Absolutely. And sometimes you got to pay taxes in the country that you're currently living in too. Is it a good idea to hire my kids in 2024? Probably not. So now here's what I would say about that. Is it legal to hire your kids? Sure, it's legal to hire your kids, but only if they're actually working in your business. If they're not working in your business, it's not, you should not be hiring your children just on paper. If the IRS ever caught wind of that or ever audited you, and you cannot prove that your kids are actual W-2 employees, meaning you don't have any proof that they're actually working, you don't have any proof that they're that like you have like a consistent sort of like hours and schedule for them. If you can't prove that they're working for you, the IRS could penalize you, and it's not a fun time. What is the earned income tax credit? So essentially, the earned income tax credit, it's a tax credit that it's designed to benefit sort of low to moderate income workers who and families, especially those with children. And essentially, you get credits for the amount of qualifying children that you have. So they've got to meet like certain criteria, like relationship, age, residency. Like you usually have to have a joint return. So essentially, it's a tax credit that benefits families. Why are California taxes so high? Well, you'll have to ask California that. I mean, it's up to them. I mean, California taxes are so high because the politicians that run California make the taxes high. It's just it is what it is. And also too, I would say that there are a lot of high income earners in California. It's a beautiful and great place to live. So a lot of people want to live there. So it's just it is what it is. Where are you reading the questions from? I'm not reading them from anywhere. They're coming from my brain. I'm just reading the screen here to answer the questions. What is the Augusta rule? The Augusta rule, it's essentially where it allows you to so this is how it works. It allows you to rent out a portion of your personal residence for your business and charge your business rent as a business expense. But also what you get paid in rent from your business, it's not taxable to you personally. So there's some really specific rules on it. Like I want to say that you can only rent it out for 14 days or something like that. So keep that in mind. And plus, it's very complicated. It doesn't apply to a vast majority of people. So be careful. Be careful about using the Augusta rule. Is it possible to file my taxes for free? Yes, there are certain tax softwares out there that don't charge you anything to file taxes. So like one that I really like, it's called freetaxusa.com. If you kind of have a more simple return or something that's just W-2, then it's a good idea to use something like that, like Free Tax USA. Is it possible that I can write off my dog? No. You can't write off your dog. Now, I mean, if you have a dog that's used for business purposes, like let's say that you're a dog breeder or something like that, then no, then yes, you could possibly write off an animal or something like that. But no, just in general, you just can't write off your personal dog. Can you answer the other person's question about how to pay yourself being self-employed? I didn't see that question, but sure, I can answer it. It's essentially, it kind of depends on how to pay yourself if you're self-employed. If let's say that you just have an LLC open up. Let's say that you're a sole proprietorship or you have an LLC open up. And let's also assume that you have a business bank account to where you're keeping things separate, like you're getting paid into your business bank account and everything like that. How you do that is you simply just transfer money. You do a manual transfer of money from your business bank account to your personal bank account. Some people call that an owner's draw, and you can do that whenever you want to. So it's really easy to pay yourself when you're an LLC or when you're a sole proprietorship. Now, when you're an S corp, like let's say that you've made an S corp election on an LLC. What that does is that essentially it turns you into a W-2 employee of your own business, essentially. So in that case, what you'd want to do is pay a portion of your earnings as a W-2 salary. So with an S corp, you can kind of think of your earnings in two buckets. In one bucket, you have your W-2 salary, and that would flow or should flow from your business bank account into your personal bank account through a payroll processor, which is something that's one of Collective services too. If you came on board with us, we'd handle your S corp and we'd handle your payroll with an S corp. But that's one way to pay yourself. Another way to pay yourself are via distributions. That's another way. So if you, like how you take a distribution is you transfer money from your business bank account to your personal bank account. You're done. You've taken a distribution. It's very similar to taking an owner's draw. And here's the reason why you might want to consider doing that is an S corp, a vast majority, or what it does if it's beneficial to you, an S corp will save you in the self-employment taxes. So before you become an S corp, like if you're just a sole proprietorship or an LLC, you pay the maximum amount of self-employment tax, it's a tax rate of 15.3% is what it is. So let's assume that you make $100,000. Your net income is 100 grand and you're just a sole proprietorship or you're an LLC. You don't have an S corp election yet. How you'd come up with your self-employment tax is you'd take $100,000 and you'd multiply it by 15.3%. Like all of your money is subject to that tax rate. Now, let's assume that you're an S corp. And let's also assume that a reasonable salary for you in an S corp is $30,000. I don't know if that would be your salary, but let's just assume that it is for the purposes of this example. Now your self-employment tax is only charged on your salary, only on the 30 grand as opposed to the full 100 grand. So that first 30,000, it's still subject to the self-employment tax, but the other 70,000 is not. Those are considered distributions on your behalf. And that chunk of money isn't subject to the self-employment tax at all. So, assuming that you made that much money and you elected the S corp tax status, it would save you a total of $10,710 in the self-employment tax. So not bad at all, right? All right, the questions are rolling in here. If you could start all over again, how would you ideally set up taxes? Well, that completely depends on your sort of personal situation. I mean, it kind of depends. I would say that for one, a vast majority of people need either an LLC or need an LLC with an S corp election. That's what most people need. So if you're making below a 60K mark, if you're making below $60,000 in a 12-month time period kind of consistently, what Collective says is that it's not quite worth it for you yet to form an S corp. You should usually just have an LLC and run your taxes that way. If you're making over $60,000, it's time to start looking into whether or not an S corp or an S election, an S corp tax election on your LLC would be in your best interest. But then there are certain individuals who might need to set up a C corporation. And a C corporation is really, let's say that if you ever wanted to go public, issue stock in your business, or let's say that you wanted a ton of, like, you wanted, to take advantage of fundraising opportunities, or you wanted more than, like 100 owners in your business, something like that. The best structure for that is a C corporation. But again, that doesn't apply to, a vast majority of small business owners. Most people just need an LLC, or they need an LLC with an S corp election. I don't have any tax processes set up and feel behind for the season. What should I do? Well, the first thing you should do, to be honest with you, I would say is schedule a call with Collective. We specialize in we'd optimize your current tax year so you don't find yourself in this position again. But that's the first thing I do is schedule a call with us and see if we can help. But if not, really the only thing that you can do is either find a bookkeeper for, I guess, 2023, your 2023 tax return. And if you don't want to pay a bookkeeper, then I would go through and look and examine all of your business expenses. Get an Excel spreadsheet and list every single business expense for that year and see how much you've spent, and also list how much you've made. And then you can determine your net income, which is your total gross income minus your expenses. So that's essentially what you do. All right. Okay, let's see some more if more questions come in. What are some situations to where you wouldn't want to be an S corp? Well, that's a good question. And like I mentioned earlier, you generally wouldn't want to mess much with an S corp if you're making below the $60,000 mark. That's one thing. So it's usually just not worth it. Um, it's just not worth it to go through all the hoops of with the S corp if you're not making enough money to take advantage of it. And then another thing I would say is there's only certain types of income that even benefit from the S corp, and that income is what is things that are subject to the self-employment tax. So there are certain types of income that aren't even subject to the self-employment tax, like passive income, stocks, bonds, certain types of investments, certain types of rental properties. Like those aren't charged the self-employment tax at all. So there's no reason to put those sorts of income activities under an S corp because there's no self-employment tax to save. Like all you're doing is kind of making your tax situation more complicated without any real benefit. So those are the two main reasons kind of why you wouldn't want to be an S corp. Well, another reason too is, let's say that you wanted to have more than 100 owners in your business. You can only have 100 people that are a part of ownership if for your business. So that's one thing. Meeting with you guys tomorrow for a consult. Excited. Well, we're excited to talk to you, and thanks so much for scheduling the call. We're looking forward to learning about your business. All right. How do I notify the IRS my address has changed? Well, really, I would say the best way to do that is when you go and you file your tax return, you can check on it. You can list your new address and you check on the return that it is your new address. So that should automatically, update your address with the IRS. But something you can also do is it's called Form 8822, and that's just an official form that you can use to change your address. But also, you can just send them a written statement. You can send them a written statement with your social security number, with just kind of other identifying information, and just send them that certified mail them that written statement, and they should change your address for you. All right. Okay, let me see here. Can I file an amended Form 1040X electronically? Well, that depends. So back in the day, like I think before, sometime before 2023 or something like that, the IRS required you to file amended tax returns on paper returns. It used to be the case, but now I believe that you can file certain tax years, certain recent tax years, electronically online. So yes, you can in certain situations. What states are best for starting an anonymous LLC or S corp? Well, unfortunately, if you live the the states have really strict requirements on where you need to form your LLC. If you live in a certain state, like if your primary address is in a certain state, that's where you need to form your LLC. Unfortunately, there's a lot of, sort of misinformation online, and there's a lot of sort of online software companies that are trying to sell you different LLCs in different states, but in a vast majority of the time it is a bad idea. Because like to remain in compliance with the states, they don't care where your clients are. They don't care like kind of where you want to set up an LLC. If your address is in a certain state, that state wants an LLC presence in that state. So let's say like I hear about Delaware a lot, that people want to file in Delaware. Even if let's say that you lived in New York, and let's say that you filed a new LLC in Delaware or something like that. You could keep your Delaware LLC, but New York would require you to usually make some sort of foreign filing into New York. So then essentially you have two states to deal with without any real benefit. I mean, you still have to pay New York taxes. That doesn't change. There really isn't a way to sort of, form business entities out of or LLC specifically out of state. When trying to find a state home for the taxes, that mainly has to do with large C corporations that have tons of investors. Like it's not a small business, it's not one person running them. Like, for example, a lot of C corporations will choose Delaware because the Delaware courts, like the legal system there, is, according to, and again, I'm not a lawyer, this isn't legal advice, but the word on the street is that Delaware has more favorable sort of environment for in the courts for businesses. But that only applies really to C corps, doesn't really apply to LLCs. Okay. Okay. Well, let me there. But also though, thank you. That's a really good question. And what you can do though is there are some companies, like let's say that you don't want your address, your sort of your personal address tied to your LLC. Like you don't want random mail coming to you or things like that. There are some registered agent companies out there that will list their business address as yours. So they receive your mail. It's kind of a way to kind of anonymize yourself a little bit when it comes to the LLCs. All right. What happens if you don't file tax returns? So that's a good question. Well, like so many things with taxes, it depends. So eventually, so here's what I'll say first off is that the IRS, let's say that you're missing a ton of returns. Let's say that you're missing like the past 10 years of tax returns for whatever reason. If they haven't filed a return on your behalf already, the IRS usually only requires the past 6 years of tax returns. So usually, anything past 6 years, you're in the clear. Like, they won't require those. But they usually do require the past 6 years. Like if you're at any time period, if they kind of go after you to file your returns, they'll usually require the past 6 years. But let's say that you're just not answering. Excuse me. You're just not answering them, and they want you to file a return. Eventually, they could file a return on your behalf. It's called a substitute for return. Like we in the tax resolution industry, they call it SFRs. And essentially, what it does, keep in mind that income information, your W 2 income sources, when you have W full time jobs, where you have like where you're a contractor and you get paid 1099, income is being filed on your name. So the income is being reported to the IRS. They know how much income is reported as people report you making that year. So if they don't get a return filed from you, they'll eventually file one on your behalf. And they give you the minimum standard deduction. They don't give you any business expenses or anything like that. And you usually those SFRs, those substitute for returns, cause you to owe a lot of taxes because you can't optimize your tax situation. Now you can, sort of refile those returns and do it, but it's a hassle. So it's just a good idea to file your returns as soon as possible so you don't have to worry about that. Okay. If I'm an online content creator, can I write off my hair and nails? Ooh, that's a good question. Now I might upset some people here because I just might. But unfortunately, I totally get why you'd want to write off your hair and nails. Like, especially if you're doing a lot of Instagram shoots or if you're, creating content, especially if you yourself are in videos and things like that. I could totally see where you'd want to write out that off as a business expense because you're trying to make yourself look fly, look good, for your audience or, for the content that you create. But unfortunately, it's a little bit of a gray area with the IRS to where they say they look at it as personal expenses. If you're doing your nails, your appearance, that's not just for business, it's mostly personal. So, like nowadays, they're not really, sort of accepting those as write offs. Even your wardrobe. Like, let's say that you want to buy nice clothes because you want to look good on sales calls or things like that. They still don't let you write that off. Now, it's unfortunate because, in my opinion, that probably should be allowed to be written off because, a lot of people are doing things on the internet. They're promoting themselves on the internet. That's how they make their money. So in my opinion, a portion of that probably should be a business expense, but unfortunately the IRS just doesn't they don't see it that way. All right, I think I have time for one more question here before I have to get going. Okay. How long will the IRS usually take before they file a substitute for return on your behalf? Well, it could take a while. I mean, it kind of depends. Like it usually I would say, in a few years is when they typically do it, but it kind of depends on your personal situation. And I believe that's all the time that I have left today. I've actually got to go speak to a potential collective member now. But I enjoyed it, and of course, I'll be here next week. And I hope everyone has a good week and good luck with all your businesses.